Hi everyone, let's go over my bullish and bearish cycle, macro and high time frame Elliott Wave scenarios on Bitcoin. Starting with the cycle bullish scenario, where we are looking for multiple 1-2s to the upside, where the latest bear market is finished and we are now looking for a bull market to the upside in the blue wave 1, followed by the blue 2 before then continuation to the upside. If we want to know when this wave 1 might top out, we have to compare the previous wave 1s with one another in time. And that is what we can do with the trend-based Fib time over here that we take from the low to the high of 1 to the low of 2 to compare the red 1 with the yellow wave 1. And you can see that the yellow wave 1 was a little bit shorter in time, almost hitting the 0.786 compared to the red wave 1, while the green wave 1 was the exact same amount of time as this yellow wave 1. So if we then take a trend-based Fib extension from the low to the high to the low here to compare a potential blue wave 1 with the green wave 1 over here, then I also of course toggle on the 1-to-1, which was important over here for green, the 786 important here for yellow, and for a little bit of leeway the 0.618 as well, giving us a time target for the all-time high sitting between September 2024, March 2025 and October 2025. If we want to know more about the target for wave 1 in price, then we also have to compare the previous wave 1s with another once again. In this case, we are using the trend-based Fib extension taken from the low to the high to the low over here to compare red 1 with the yellow wave 1 in price. And you can see the yellow wave 1 is a little bit shorter compared to the red wave 1, almost hitting the 0.618. Of course, this is on log, not necessarily the price movement, right? From 200 to over here, 20k is of course more than going from 0 to about 1100. However, it is on a logarithmic scale. If we then take a trend-based Fib extension from the low to the high to the low here, comparing the yellow wave 1 with the green wave 1, then you can see that also here the 0.618 played a very important role, which is of course the reason that for the blue wave 1 that I also have the 0.618 on my chart pulled from the low to the high to the low here, giving us a target at around 100k, and for a little bit of leeway the 786 is on my chart as well at about 180k. If we then zoom into the macro bullish scenario, then this is what we're looking for. 1, 2, 3, 4, 5 to finish that latest bull market at 69k. Then we have a corrective structure to the downside in a WXYXZ, which is rare, especially on the higher time frames more so. Wave 2 is in, and then we're looking for bullish continuation to the upside. I have two bullish scenarios that I'd like to share with you. The first one is this scenario here, where we are looking for an impulse to the upside that is not yet finished. So here we're looking for a wave 1, wave 2, retracing to the 0.382, which is a less common target for a wave 2, then a wave 3, looking for 4, and eventually a wave 5. After this wave 5, we then look for a sharp corrective structure to the downside in a wave 2, before then continuation to the upside. The common target area for a wave 4 is between the 0.5 and the 0.382 Fibonacci, taken from the low to the high, giving us a target area between 39.9k and 37k, with the 0.618 being an invalidation for a wave 4, sitting at 34.1k. Time-wise, preferably, this wave 4 is ending after the 0.382, which usually would be a minimum relationship between a wave 2 and a wave 4. Because this wave 2 was long and shallow, the probabilities do increase for wave 4 to be short and deep. But still, preferably, it ends after the 382, which is sitting on the 4th of March. It can definitely, however, be a deep corrective structure, because in a wave 4 we are looking for a 3-wave corrective structure, where based on the lower time frames and the daily updates that we do, we are looking for potential wave A here to the downside. Then we want to see a wave B before a wave C to the downside here. If we take a trend-based Fib extension from the high to the current low that we have, and we toggle on the wave C most common target area, which is between the 1 and the 1.236, then you can see that price retracing to 44.7k is not enough for this wave 4, because now the 1-to-1 is in direct confluence with the 0.618, which is of course not what we like to see in this scenario, as the 618 is an invalidation for a wave 4. So preferably price has to retrace to at least 46, 47k. We do have some additional resistance in that area, as spoken about of course in the daily updates, for this target area for a wave C to be above the 0.618 and gets close towards the 0.5. So that is something that we definitely have to keep in mind. If price is turning around at like 44, 45k, probabilities are quite high to look for this 0.618, which then increases the probabilities for the other bullish scenario that I have. Now this scenario does work very nice with the volume profiles here, volume profiles of this range. We spend a lot of time in this range in 2021 as well as the start of 2022, as you can see, and it is a very important range. You can see over here at the lower end of the range, big support resistance area, resistance, resistance. We closed inside, increases probabilities to move to the point of control. Closing above the point of control increases the probabilities to move to the value area high, which is the area that we have hit, which was in confluence with the golden pocket taken from the high to the low as well. So that is some important and nice resistance. Price moving towards the downside, hitting that point of control again over here for now a nice bounce towards the upside. You can see that the target area for a wave 5 here, which by the way is pulled from the high L3 to the 0.5, is just above the value area high and also above 50k, as the target here is between 52k and 56.6k, which is nice because sometimes you do have deviations from the range, just like we had here as well. Arguably you could even say this is a deviation, but we are then looking for a move to the upside and eventually a move back down to look for this wave 2, where the most common target area for wave 2 is between the 0.5 and the 786, which is pulled from the low here at 15.4k to like an estimation of the high here around, let's say, 56.5k, and then you can see that this target area is in very nice confluence with the lower side of this range. From an Elliott Wave point of view, also with the other scenarios that I will show you here, it is for me extremely unlikely that price is just going to push to the upside without at least spending a couple of months in this range in 2024. If we look at the other bullish scenario, then this is the one that we're looking for. As you can see, it's also again in nice confluence with the range, where the target area for this wave 2 and then a double 1-2 scenario, 1-2-1-2 for then a wave 3, is at the lower end of the range. Common target here between the 786 and the 0.5 Fibonacci, taken from the low to the high, which gives you a target between 30k and 37k. In this scenario, the second wave 1 is of course a lower degree wave 1, because we look at the yellow count being the higher degree Elliott wave count, 1, 2, 3, 4, 5 in yellow, and inside wave 3 we look for the green count, 1, 2, 3, 4, 5. Preferably, however, a lower degree wave 1 and 2 is shorter in time and price compared to the higher degree wave 1 and 2. But as you can see, this green wave 1 is longer in price compared to the yellow wave 1, because price moved above the 1-to-1 trend-based fib extension taken from the low to the high to the low. On the logarithmic chart, however, that is not the case. Then you can see the wick of the red candle over here is just below the 1-to-1, but the problem on the logarithmic chart for me is that this wave 2 did not even hit the 382, and the 382 is already a less common target for a wave 2, and not even hitting it is very, very low probability. So therefore I prefer the linear chart, but then we have this problem over here. Now for this wave 2, we also preferably have the correction finishing after the 0.382 fib time taken from the low to the high of this wave 1, which is sitting on the 19th of February 2024. If we then go to the cycle bearish scenario, we are looking at a finished 5-wave impulsive structure to the upside, and now we're looking for a multi-year corrective structure to the downside. So we basically want to see another move down. The 0.236 for me here would be a maximum target for this wave 2, just like you saw over here, right? On these very, very high time frames, the regular Fibonacci targets for wave 2s tend to not be respected. Most common target for wave 2 would be on the lower time frames, the 0.5 to the 786, which is $400 to like $20. Of course, very unrealistic, but just like we saw over here, The 0.236 acted as support, and here it was the 382 eventually. So here I'm also looking for that 236, which is currently sitting at 6.2k as a maximum target for the drop in this wave 2 before then continuation to the upside. Also here, it's true that preferably the wave 2 is ending after the 0.382 trend-based fib time taken from the low at 0 to the high over here, which is sitting on the 1st of September 2025. If we then zoom in to the macro bearish scenario, then this is the scenario that we have to look for. We are looking for a 3-wave corrective structure to the downside in an ABC. Here we have the impulse up 1, 2, 3, 4, 5, the latest bull market to finish the red wave 1, looking for that 3-wave corrective structure to the downside. Now where price is at the moment is very important resistance. We are between the golden pocket and the 786 on the linear scale, as you can see, on the logarithmic scale, as you can see, and on the linear scale you can see that price has hit the golden pocket with the 786 sitting at 57.7k. So even if we move towards the upside, we are not yet clear of a potential wave B and a C towards the downside. It very much depends on what happens on the lower time frames, but in this scenario we are looking for the high of a wave B, with the 886 by the way being also still a target for B, for then a move to the downside in a wave C. The golden pocket here is in confluence taken from the low to the high, with the value area high of this multi-year volume profile giving the area between 12k and 8k very important support for potentially the low of C and continuation to the upside. Generally, this support resistance area is very important on the chart on the macro time frame between 28.7k and 33k. If we then zoom in to this structure over here and look at the daily bearish scenario, then we are looking for a 3-wave structure to the upside, where we have a wave A followed by a wave B, where the common target for a wave B is the 0.382, which of course is different compared to a wave 2 where the 0.382 is a less common target, and then we're looking for a wave C to the upside. Preferably a wave C is finishing between the 0.618 and the 1.618 fib time taken from the low to the high to the low of B, comparing wave A with wave C. So as it stands, this is very nice. Any common target area for wave C is between the 1 and the 1.618, 40k to 50k pretty much. But as mentioned, even if price would move to the upside, we are not yet out of the danger zone. We have to continue to observe what the structures tell us to then give probabilities to this wave C or the bullish scenarios, as of course this is a bearish scenario where we expect impulsive structures to the downside, where potentially this can be your wave 1 looking for 2 and then a bigger wave 3 to the downside. So if we then look at the probabilities of the different scenarios, then on the cycle monthly time frame, right, then the probabilities are neutral, because when we look at the bullish scenario, then having so many 1-2s building up on such a high time frame is quite uncommon. But at the same time, in the bearish scenario, your wave 2 is longer in time than your wave 4, which is also not preferred, as usually a wave 4 is longer than a wave 2. On the macro time frame, however, there is a slight probability for the bearish scenario, and that is because a WXYXZ corrective structure to the downside here for the low of a wave 2 in the bull market for then continuation is a very rare corrective structure, more so on the higher time frames. On the high time frame here, probabilities are also a little bit geared towards that bearish scenario, just because of the 382 bounce that we have here, which is a common target for a wave B, but a less common target for a wave 2. However, by all means, both of the scenarios are still having probabilities, and we continue to observe the local price action with the daily updates. So currently we are keeping our eyes open here locally for a potential ABC down or a 1, 2 and a wave 3 down in the upcoming week, and then in 7 days, when I provide you with the new cycle macro and high time frame video at 7 p.m. Central European time on Sunday, we'll see what additional information we got from the chart. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.